Yo, what's good, boys? It's Monday. It's currently 12:18. Obviously, I'm trading at half two. Um, so yeah, I woke up at 11. To be fair, um, pretty early to trade. I normally wanna go to bed at like half one, two to wake up for 12. So I get about 9 to 10 hours sleep. Gives me a couple hours before I trade as well. Instead of literally going to bed late, waking up early and just feeling grim. Um, so I'm gonna share with you the price action for today and why this video is an FX replay session and not a session recap. Because I know some of the guys in the Discord and some of the guys that have messaged me, like regarding today's trading, saying it's not been the greatest, and it's because, right, we can obviously see chop, chop, chop. Why do we think this is? Cool. Why do we think this is? All this is chop. All this is chop. All this is chop. All this isn't as much chop, but there wasn't really any trades to take on that. Why do we think that is, guys? It's not dragging over. It is because there is no news today. No news means there's no liquidity in the market. News brings liquidity, news brings volume. When it's a day like this, there's no news at all. There's not going to be any really big movements because news is used to seek liquidity to continue the direction it wants to go. So when you haven't got liquidity, aka when you haven't got a lot of news, there's no real reason for price to make big moves when there isn't any news to cover up the liquidity that is random. Because a lot of people just think, oh, news release, it could do whatever. No, it is done to seek out liquidity, providing when you sweep a liquidity point, obviously you're looking for a reversal or a continuation of the daily bias, whatever you're doing. But a habit a lot of people get into, they mark minor liquidity, which is kind of the topic of this video a little bit. The main thing is liquidity. Liquidity, blah, 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 blah. You know how to trade. You know exactly how to trade. I know how to trade. You know how to trade. The only thing that is stopping us, right, and why we think that there's no hope and let me change strategy, it is liquidity, and it's so important. And I've been doing a lot of research over this weekend because I'm not in the same boat. I'm still banging trades on FX replay, but it makes you question, like, why are some trades way, 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 way better than some that get stopped out at break even and haven't really moved? And what I've come to is liquidity. Like, you probably think, right, and this is me as well, liquidity is the easiest concept of trading, like how we trade SMC. Because break structure, that's easy to see. Fair value gap, easy to see. Equilibrium, very easy to see. Whatever. But those 3 or 4 concepts, if you include order block, those 4 concepts, right, they're textbook, okay? So if you see a high, so you see move up, move down, that's a high, and then price comes up and closes above, that's a break structure, that's textbook, right? There's no, oh yeah, but if it breaks 3 pips above, then it's valid. No. If it breaks above, it's valid. Same with a fair value gap. You've got 3 consecutive candles. You've got 1, 2, 3. If you've got an inefficiency with the second candle with a wick on the first and the third, that's a fair value gap. Order block, a bit more techie. If it has a low and then it gets set a low as it moves down, move up, that's a low. Then we sweep this low, break this high that we just made, that's an order block. This whole move down is the order block. Textbook, easy to understand. Equilibrium. You have, I'll do it with the drawing. You have a move up and a move down, that's a high. Then you've got to move up because you had to move down and move up, that's a low. So you're now in this range from here to here. Easy. But liquidity, you've got to pick the right liquidity, because if not, you're trading off just a high and a low and looking for a break of structure, even on the 1 minute time frame, to get a trade. And then when you get stopped out, you're like, why? It literally went in my direction. Because you didn't mark the right liquidity. So we're going to get into that now. I'm going to show you, what do we want to do first? I'm just going to show you the charts today. Also, if you like my background, it's just pretty, isn't it? It's a nice beach. Maybe one day I'll find that exact beach and be like, yeah, you helped me made it in life. But yeah, you wouldn't want to trade this. The only liquidity, right, in this entire range is that been swept. Cool. So we're at London now. You wouldn't want to mark that. Why? Because it only got made at market open. And you're looking for previous liquidity. Like this would have been Asian low, but it already got swept. Why have I marked this instead of this? Which one's more prominent? Is it this one, which is relatively equal lows? So you could have marked either or because they swept both. You could have marked either or, but as you can see, this one took it, but then the next candle is what gave the reaction, and the next candle swept. This one is prominent. And you might be asking, what time frame do I use? Hourly or 15 minute? That's it. And now you can sort of see, if we mark the same low that we just had, go on the 15 minute, these are relatively equal. So like I said, you could have done either or, but which one's more prominent? That one. There you go. But if they're that close, just take the most prominent one. Like, why would you want to take it from here and let's say it closes on the hourly and you get stopped out, and then it comes to here and then it moves up? Just mark the most prominent low on high. So yeah, like I said, I want to go over this one because one of my guys in the Discord is wondering why he got stopped out, and the reason is, I don't know where he entered in regarding to this and if he had the same liquidity marked. However, I'm just going to put it in my eyes, if I was trading this, bear in mind I stopped trading at 11. So as you can see, sweep this sell side liquidity, and actually I'm going to show you again. Let's see if it's... If anyone knows why it keeps doing that as well, please let me know. Or even this one. Why would we not use this one? Because it got swept. So, what's my CPU? 20 CPU. That's crazy. So yeah, like I said, both liquidities are relatively equal. However, this one closed through it, and this one wicked it. So why would you want to take the one that closes through it over the one that gets wicked? You don't. Delete that. Anyways, we sweep liquidity. We break structure. Okay. What have we got? Gap right there. Gap right there. Does price ever come down to this range after we broke? No. The only next break of structure would have been there. And guess what? I stopped trading at 11. So it's like there was no trades. I wanted to do USD especially. But don't force trades. Mark the right liquidity, mark the prominent liquidity, and yeah. So we are gonna. We could make this a psychology episode because it is. This is psychology. Like I've literally struggled with this. I've doubted everything I've learned for the past year and 3 months. Everything I've been learning because I didn't understand what I was doing wrong. The thing I was doing wrong was liquidity. Because it seems too easy. It's like, oh yeah, I'll just mark this high, this low. Okay. And if you'd have marked this low at market open, you would have got stopped out if you'd have took a trade. I don't know if there was a trade. Probably not. Oh, well, if we'd have marked that, you can see this 5-minute candle. What would people probably be doing? They'd be here waiting for a 1-minute break of structure and be like, why is it not breaking structure? Why is it not going up? It's not valid liquidity. Because I've literally struggled with this. This is, I don't want to say it's the key, but once you finally understand liquidity, and I'm still learning, I'm still improving, there's going to be days where I get the wrong liquidity and it just doesn't want to use it. And there's going to be days where I mark the right liquidity and get perfect trades. But a lot of people, no one really talks about it. Nobody really talks about the issue with liquidity and how easy it is to get mistaken for every high and every low. And do you know what I mean? So maybe this doesn't apply to you. This applied to me, especially over the weekend. I was like, what? I know how to trade because I'm getting trades, but it's like, why are some better than the other? Because if I didn't know how to trade, right, I wouldn't get any trades in my favour. But I do. And it's like, how can I make all my trades be like this? And what's the main thing that people forget, including me? Liquidity. So I'm going to leave that there. I'm going to make that a psychology video because it is more psychology because I've literally struggled with it. And it makes you doubt everything. Trust me, I've been there. It makes you doubt every single thing. But yeah, take this on board. Trust me. If it doesn't affect you and you're profitable and chilling, cool. But look, try it. Maybe you're marking the wrong liquidity. Maybe if you marked the right liquidity, then you would have already applied you applied to the wrong liquidity and made a winning trade. But don't force trades. Like in this one, break structure, equilibrium. It doesn't come down to discount. You're not trading. Because where are you going to put your stops? Right? Where are you actually going to put your stops? I'll mark the rate just in case. Right, say you enter, I think that's a breaker block. Don't know. Haven't been taught it yet. Right. You get a 5-minute candle at the breaker if it is a breaker. You could put your stops. You could put your stops at the breaker. And target what liquidity? What's the most prominent liquidity? Right here. And right here. Does it hit any of that? No. Does it hit this? Yes. Is that prominent? Not really. It's the low-hanging fruit. And if you wanted to target that, if you wanted to make 3 pips for not even a 1-to-1, then cool, that's how you trade. realistically your stop should go below the low. And how do we make it go below the low? We enter in discount. Because then, right, if we took a trade of this breaker or whatever the fuck it is, right, and we can still have our low below the low. Say we did target this. That's not even a 1R. Instead of, we just wait for price to come to discount. Let's say we get 5-minute candle out here. Let's just put it there. We can now target this low and target the same liquidity points. We're going to get rid of that because it's irrelevant. Target the same liquidity points with a proper stop loss and get a better RRR. That's why we use discount. But yeah, I'm going to make this a psychology video because it is honestly something that's been affecting me. A lot of people don't talk about it because they think, no, liquidity's easy. Maybe I'm doing breaker structure wrong or fair value gap wrong. No. Once you know daily bias, once you know breaker structure, once you know fair value gap, order block, equilibrium, easiest concepts to know. Once you know them, it sticks like riding a bike. Liquidity is the unspoken one that doesn't get talked about and can be a big issue. Like, even with this, if we'd just waited for it to come to discount, could have even targeted that now because it's a bit more relevant. 1.7R, cool, it's a bit more relevant. However, me going here targeting that, it's not relevant. It's not what you want to trade. Don't force trades. So if we was take anything from today's psychology video, don't force trades. Let's just put it in a box. Make this small actually. 1. Don't mark out prominent 1 hour / 15 min liquidity highs / lows. Actually no, let me just write that better. Prominent 1 hour or 15-minute highs / lows as your liquidity. 2. Don't force trades. 3. Take trades in the daily bias. What else can we write? If price doesn't come into discount, don't trade. 5. If the RR is bad, don't trade. Okay, not waiting for price to come down to discount / equilibrium for entering. That's still really small. But look, I don't know if you can see it, you should be able to. Read these, right? And apply it. Because no one talks about liquidity. It's too easy to even talk about, but it's not. It's easy once you understand it. If you don't understand it, then you probably will not be successful until you understand the right liquidity. Trust me, I've been there. I still am there. I'm just working on it. I've just understood the problem and I'm working on it. So hopefully this video relays on the problem that I had, and if it's the same problem as yours, apply it. Apply these changes. Apply my text box, what I wrote. But yeah, I'm going to make a FX replay session now. Obviously no session recaps. We've just discussed why. And yeah, hopefully this helps, and I'll see you guys in the next video.